All right, let's just jump right into it. Picture this. You're doing well, you're making a good salary, let's say 80 grand a year. You've done everything you were supposed to do. You've been responsible, you saved your money, and you're finally ready to become a homeowner. So you do what everyone does. You open up Zillow, and every single starter home that isn't actively falling apart costs at least $400,000 and comes with a kitchen straight out of 2003. But here's the crazy part. The bank sends you this pre-approval letter saying you're good to go. Your real estate agent is all smiles, nodding along. Your family keeps asking, so when are you finally going to buy? So what's the problem? Well, here it is. You can't actually afford any of these houses. Not in a way that doesn't completely wreck your finances and turn your life into a stress fest. And what's truly mind-boggling, nobody in the entire process, not the lender, not the agent, has any real reason to tell you this simple truth. So in this explainer, we're going to cut right through all that noise. We are going to calculate what you can legitimately afford without having to spend the next decade praying your car doesn't break down. Okay, let's start with the hard truth of the housing market right now, because, well, the numbers are pretty brutal. This is what I call the affordability illusion. So the median household income in America is just under $84,000. On paper, that sounds pretty decent, right? The problem is the median home price is sitting at around $415,000. Think about that. We're asking people to buy homes that cost 5 times their entire annual salary. If that sounds completely bonkers to you, congratulations, you are paying attention. So you have to be asking, how is this even possible? Well, it's because of what I think is the single biggest lie in the home buying process, the way banks do their math. Let's really break this down. You know, in personal finance, there's this old rule of thumb called the 28% rule. It's simple. You shouldn't spend more than 28% of your gross income, that's your income before taxes, on housing. But the banks, they play by a totally different set of rules. They'll approve you as long as your total debt-to-income ratio is under 43%. And let's be really clear about this. That 43% number is not a recommendation for a comfortable life. It's the absolute maximum financial stress they figure you can handle before you just default on the loan. So let's actually build the real monthly cost of, say, a $400,000 house, because that number on the listing, that's just the starting line. Your mortgage payment, the principal and interest, that might be around $2,150, but you're just getting started. Now add property taxes, another $450. Then homeowners insurance, tack on another $300. And since you probably didn't have 80 grand for a 20% down payment, you've got PMI, another $275. And finally, the one everyone forgets. Maintenance. You got a budget for things breaking. That's at least another $333 a month. So you add all of that up, and your actual monthly housing payment isn't $2,000. It's over $3,500. That is the real number. That's what it costs to keep a roof over your head in that house every single month. Okay, so what kind of salary do you need to handle that payment? Well, the bank, using its risky 43% rule, would probably say, sure, we'll approve you on an income as low as $98,000. But if you want to actually be comfortable, using that 28% rule we talked about, you need to be making $150,000 a year. And that right there, that is the entire problem in a nutshell. There is a $52,000 gap between what the bank says is fine and what is actually financially survivable. This gap, this is the reason why so many new homeowners feel house poor. It's because they are. And what's the result of all this? Well, only about 20% of American households even make 150 grand or more, which means a staggering 80% of households cannot comfortably afford a home that costs less than the median price. We've basically turned the typical American home into a luxury item. Look, all of this just paints a picture of a fundamentally broken system. And if you're out there struggling to afford a home, I just want to be really, really clear about something. This is not a personal failure. The game itself has completely changed. Think about it this way. Your parents, they bought a house in a completely different economic reality. Back in 1980, the median home price was about 3 times the median income. Today, it's 5 times. They were buying houses that cost 3 years of their salary. You're being asked to buy one that costs 5 years of yours. And I know what the counter-argument is. I hear it all the time. But they had crazy high interest rates, like 13%. And yeah, they did. But here's the key. The purchase price itself was so much lower, which means their total loan amount was way smaller. And this is crucial. When interest rates eventually dropped, they could refinance. You can't refinance an insane purchase price. And of course, this crisis looks totally different depending on where you live.
The income you need to afford the median home in San Francisco, over $500,000 for what's basically a 600 square foot studio. Meanwhile, in Cleveland, you only need about 64 grand to afford the median home there, which might be a 4,000 square foot historic mansion. It's wild.
So now let's talk about all the costs that just jump out and ambush you after you get the keys. Because believe me, that mortgage payment, that's just the cover charge to get in the door. So, recent studies have shown that the average hidden cost of owning a home is over $21,000 a year. That is another $1,700 a month for stuff like maintenance, utilities, taxes, and insurance that nobody ever puts in the glossy sales brochure. And here's the thing. Stuff will break. It's not a question of if, it's a question of when. A new roof? That can easily be $30,000. A new HVAC system that dies in the middle of a July heat wave? That could be over 12 grand. These are the kinds of expenses that turn a tight budget into an absolute catastrophe. And on top of all that, some of these costs just keep going up and up. Homeowners insurance premiums, for example, have jumped almost 50% nationally in just a few years, thanks to things like climate change and inflation. These are relentless costs that just don't go down. Okay, so after all that doom and gloom, let's talk about what you can actually do. How do you win a game that feels completely rigged against you? Well, the good news is you do have smart, strategic choices. Number one, you can move. This idea of geographic arbitrage is very, very real. Number two, you can just buy less house. Optimize for your financial stability, not for the house you think you're supposed to own. Three, you can house hack. Buy a duplex, rent out rooms, do something to get rental income to help pay that mortgage. And number four, you can wait. And this is a powerful one. Keep renting, save money like crazy, and let your income catch up. And I really want to hammer this point home. Waiting is okay. There is no trophy for being house poor. Making a smart decision based on the real math isn't failure. It's wisdom. The system is failing you. You are not failing at homeownership. So at the end of the day, the real question isn't whether you can technically get a bank to give you a loan. The real question is this. Will owning that house actually improve your quality of life? Or will it just become a machine for transferring your money to a bank while you lie awake at night stressing about the next thing that's going to break? Understanding that difference, that might be the most valuable financial lesson there is.